And he's here.
Haircut.
Star
With the fresh cut.
Fresh cut, man.
Making moves with the shorts. How we doing?
Yo,
Good.
all good. All right. Don't be afraid to put your camera on as well when you're speaking, yeah?
No worries.
All right, bless. Okay, so let's start the podcast. So, welcome to the AfroFinLab, members of the decentralized movement. We are here today with myself, Tashoma, Sidney, James, Josh, DC, and our guest today, Lamine. We have a new concept. We're gonna start inviting members of the audience into our shows, just to kind of like be a referee in a sense, to kind of like reel us back when we get too deep into our technical jargon and so on. We have to like reiterate the whole purpose of this podcast is to make this whole cryptocurrency realm simple for everyone and to be able to like distill these complex but innovative and revolutionary ideas down to the common person, especially within the African community. So today, based off the feedback that we had on the previous podcast, we just want to get a bit deeper into what Liqwid is. So DC, like, could you just give us a few updates on what you've done so far? Like, in fact, like, just maybe just start with a pitch and then just give us some updates on like what's been happening with Liqwid so far.
Yeah, absolutely. I mean, I'm glad that we're getting some, good early feedback and traction. That's always, amazing. And big shout out to this team, first of all, Tashoma, Josh, Sidney, James, Mercy, even the contributions that she makes always in the chat. We're constantly innovating in our Slack chat. We're constantly thinking about different concepts, but, at the heart of what Liqwid protocol really is you're saying for any borrower, right, who wants to earn their credit and earn the ability to borrow at 0% collateral, right, at some point in the future, they can come into our app and easily get a low-cost finance loan. No term limits, no fixed costs, none of these 25% interest that you get with OPay, right? The current incumbent in the system, but basically saying in a frictionless Web3 system, you can not only come in and get a cheap, low-cost loan, you can become an owner of the protocol that you use every day to finance while you build and earn your on-chain credit, right? Eventually,
and DC, I'm gonna just jump in every once in a while and just just to kind of clarify some things. So I know that you mentioned OPay. So OPay is one of the players, and it's a Chinese funded company, right? That's one of the players in Nigeria right now. That's basically kind of managing this kind of mobile credits ecosystem.
Josh could speak a little bit to OPay, how they operate right now. I know that their, Chinese VCs are backing them, and they're, the major Nigerian fintech that's innovating in the space. But really, it's the loan app lending space, right? It's the borrowing app space for investments, right? So you're creating a marketplace that matches those who want to borrow at low cost of finance and those who want to earn on the capital they already have. That's truly the heart of Liqwid protocol, right? While we do things like connecting to wallets so that you can do KYC and build, on-chain credit by having, your actual data and proof of person on-chain. That's all things we just get from Atala Prism, right? Like, those are all things, the rest we just get from Oracle pools, and that stuff just kind of sits in the background. But at the heart of what a user functionally is going to see in our application, when they download the mobile app, they're just going to see, are you a borrower or are you a lender, right? Either way, you're going to have to load assets into the liquidity pool, right? Because both come into our system the same exact way. So that's kind of the concept behind, taking some of the DeFi primitives and introducing some real world concepts like, proof of identity and proof of person, right? Like giving, the central banks and the banks in Nigeria a way to say, hey, we can actually, responsibly not only respect, our users' data, but we can monitor how they're doing in this, Web3 world. They're already on Ethereum, right? NGNT. The Naira stablecoin exists today. So that means that, people are already trading their, barter app NGN for, Ethereum ERC20 NGNT. We're just saying with Liqwid protocol, we're going to allow that, money to be put to work or to be used as collateral in our system to take out a loan. Right?
So I have a lot of friends that from the D Detroit, Michigan area that are somewhat interested in like crypto and, you know, the possibilities of crypto. They keep hearing all of this talk. How does this relate to them? Is this something that they can participate in, something that they can help fund, or is there going to be an opportunity for them in the future? Or is this primarily for, you know, the market in Nigeria? How would they be able to participate and earn on, you know, being a lender, or however else they might be able to participate in the protocol?
Yeah, you know, and it's hard because there's so many different avenues when you talk about an open source software combined with a liquidity pool, you know, combined with things like on-chain data, right? And that's really what we're saying with Liqwid protocol. And like, without getting, you know, too into the weeds of like the technical aspects of it, just imagine it, like, let's think about what Cardano actually is. You know, let's think a little high level about how you actually build applications on top of the Cardano stack, and then how applications actually get built a stack on top of that. We talk about like layer 3 and what's happening on Ethereum right now, right? But like, what does that actually mean in like real world terms? And like, Sidney, to your point, like, how does your, you know, how do your buddies actually interact with these protocols and systems today to become people, you know, earning in the system or pooling their assets and, you know, getting fees, you know, accrued to them basically just for holding assets in the liquidity pool, right? So what we're saying is, let's start at the top. Cardano is, you know, a decentralized, you know, basically operating system for finance and social systems, right? You can use smart contracts to run, you know, arbitrary logic in these codes that will execute given a certain amount of, you know, pre-agreed upon terms and circumstances. If the price of ADA is X amount, you know, this futures contract says, you know, Dewayne either has to sell or buy ADA at this price. It was all agreed upon in the past, and basically just using Oracle pools and Cardano to execute it, we're saying that no one else needs to touch this, right? So Cardano as itself is just this very generalized system, this operating OS stack that you can build all of these different types of systems on top of, right? That are super specific and niche to different categories.
So like building on Cardano, you can build anything, right? So like anything that's built in like, let's say Windows OS or iOS or Mac OS, for the most part, you can build those type of things on top of this operating system.
You can, and it's purpose built for a specific thing, right? In this case, like, it's those high value applications, like those things linked to identity, those things linked to voting, right? Those things linked to personal finance and ownership, right? Like, those are the type of like value applications that you talk about living on chain and like willing to pay the fees to basically, you know, enable that. Sorry guys, 1 second, someone's at my door.
No worries.
I'm so sorry guys.
That's all good.
No worries.
Okay, we're good. So what I'm saying is, right, guys, if this is the current setting right now, and you can just build anything on top of it, why can't we just build a money market system that connects, you know, buyers, right, or borrowers in this case, with lenders, right, or those who have capital and want to earn interest, right? And that's all really Liqwid protocol is doing. It's saying there should be a marketplace that doesn't exist with the middleman that's setting the rate, setting the loan, setting the fixed fee. In this case, that's what OPay is, right? For Nigerians today, like, you talk about the best place for them to go to get a loan, it's the third-party loan apps. It's the OPays of the world. All Liqwid protocol is really saying is we're combining this idea of a liquidity pool, right? This idea that anyone can join as a lender and earn, you know, ROI on their assets. Essentially, the ROI that they're earning is just the interest rate that the borrower is paying minus the cost of the transaction and the smart contract fee and the fees that the protocol actually charges for the loan origination, right? So those are the actually only costs that get taken out of this, right? So it's a very different, you know, Web3 kind of model compared to the current, you know, Web2 model where a middleman like OPay sits in the middle, right? There's kind of KYC, AML, overhead costs fixed into this because of the Nigerian banks, you know, regulatory and compliance units and what they have to actually carry out. And it's just the law, like you can't escape that, right? We're saying you can streamline that process using autolocrism, right? When you have things like on-chain identity, all of a sudden you have these borrowers who are passively accumulating their own credit on-chain. So this is the concept of like, you know, social lender, right? Being able to say, hey, I've linked this identity. You know, I know your LinkedIn, I know your Facebook, I know your Instagram, right? I know that, you know, this is your past loan history. This is your ability to repay loans at this interest rate. So I will or will not loan to you at this rate. We're just saying we can pre-program an algorithm to have a strategy that takes all of those different things into account and then gives you the best cost of money, right? Cost of capital, right? So that's the concept of, go ahead.
I was just saying, and you can get that loan regardless of your history, right? Your borrowing history or your social history or whatever it might be. You'll be able to get those loans. But what participating in this social operating system will help with is if you've been consistent with like repayment of loans, you get like the kind of, you know, near zero or zero interest rate on your loans.
And even cooler, right, Sidney, exactly. But and even like, you know, taking it to the next level, you talk about what is an open source software stack, right? So say that person, Sidney, that you just mentioned, they're using Liqwid protocol, they're building on-chain credit. It's been a year, it's been 2 years. They, you know, repaid all their loans and they haven't got liquidated. Now they can take, you know, all of that data that they built in our system, go into an app that's built right on top of us. Maybe that app is specific for mortgages, right? So the only thing you can do in that app is take your Atala Prism wallet, take all your, you know, on-chain credit history, and basically go get a securitized mortgage. And basically, at this point, you can even offer it may be more competitive, like mortgage interest rates than what you get in you know, Europe and America. You could even be able to say 0% collateral for a mortgage. Go buy, you know, a $500,000 house right now. And because of the on-chain credit that you've accrued as a borrower in this network over time, right? You're actually secured by the system, right? You have the FICO equivalent of an 800 credit score, right? So that is what our system enables by combining the liquidity pool with the open source software tech, right? Because that stack of itself, anyone can build. Any open source software dev in Africa can say, hey, there's a really cool idea to, you know, take these, you know, credit scores and build a, you know, a data product or build an insurance product, right? There's so many different things you can do. You can say, you can match liquidators like Josh's, you know, Lamba Bros, right? If Lamba Bros NFT real estate wants to come into our network as a liquidator, we can basically say, okay, Liqwid protocol, right, is basically saying you're not actually in the liquidity pool because the fact that these NFT tokens that Lamba Bros are tokenizing are going to be, you know, $250,000, you know, $500,000, maybe $1 million US, right? So they're going to be already high value NFTs. They can get paid a steady 1 to 2% to not actually be in the liquidity pool, but to step in as a buyer of last resort if there is something like, you know, a credit or like a crisis where we have like, you know, a bank run type of issue, where actually, you know, there's a major discount on the underlying asset, right? And there's collateral outstanding in the system, and we need, you know, liquidators to basically step in and be that last resort buyer. We can even create a futures market in our system that says, hey, if you're going to become a borrower in our system, right? So you want to maybe take out Q tokens and then go to another DApp and use those and yield farm, right, as we call it, or use them in any other DApp on Cardano, right? You're now in the Cardano Web3 world, essentially. If before you had to leave that system, you had to actually match your collateral, so your underlying, with a liquidator, like a Lamba Bro NFT that said, hey, at this price, you're going to buy my underlying asset, right? And I'm going to let you have the discount that you're purchasing at, if it were to fall to that level in the future, right? Now, when you take your collateral as a borrower into another system, you're reducing the risk. Say you go to a synthetic decentralized exchange on Cardano, right? And you want to go, you know, all crazy hard DeFi, right? Then you're actually reducing the risk, because when your collateral potentially gets liquidated, right? The underlying asset, right? On our Liqwid protocol, sorry, we're okay. You're okay on that third level application, because your collateral has now been it's now been made whole again by that liquidator who actually purchased it at that defined price. That's the point of creating a futures market for those borrowers in our system. And you can, it's a hybrid. You can do that or you don't have to, right? It's like having an insurance product tied to your home.
All right. Like everything you're saying sounds fucking amazing and well thought out. Like, I'd say a good like 40% of it just completely goes over my head. I'm still like digging through it and like trying to understand these concepts, because a lot of it is like very financial, and I still don't really quite understand derivatives, let alone what you're talking about. But like what perks my ears, like what I'm really concerned about is when you talk about bridging CeFi with Web3, right? And like Sidney, could you let me share my screen?
Yep.
But I came across a project back in 2013, 2014, and It sounded kind of similar. It was called Kipochi, and it was like a UK-based wallet service that launched in March 2013. And what it planned to do was integrate with Kenya-based mobile payments provider M-Pesa and allow its users to basically send and receive Bitcoins before converting them to the local currency, right? Now, this was like obviously before the time of liquidity pools and stable coins and all the cool stuff that we can do with smart contracts now. This was just here with Bitcoin. But like, unfortunately, like, I'm gonna try to share my screen now. Yeah, unfortunately, like they got basically shut down, like, and Peso like basically shut them down within a few weeks of operating. Something to do with what did they say? It was very difficult for a foreigner to scale by working from the grassroots up. Like, I just think it's an interesting case study, but I mean, what is it that makes you feel that now is the right time to launch something like this again, like integrating CeFi with the blockchain? And what is it that makes Cardano special? Like, you know?
Yeah, that's a great question. There's kind of multiple answers, and I read that article. Really interesting, and definitely a case study for something like what we're building. But first of all, let's take this concept, right? We're giving life to ERC20 stablecoins right now, like the NGNT, for example, right? That's an ERC20 that lives today. So essentially, Liqwid protocol is actually building on two different stacks. One of them is the Ethereum stack. So we're very, sure that Ethereum, maybe it's going to be expensive and slow and the transaction fees are terrible, right? But at the end of the day, it's going to be here for, another decade or two. We know that by now. So there's actually some security in building on decentralized, even if it's not Cardano decentralized. Think about it. You're giving life to all of these coins that are right now just sitting in people's wallets, probably not even being put to work as either borrowers or lenders, which is what they really want to do. That's why they hold, that their currency stable coin, or they're traders, right?
And DC, to that point, like, because like the technical part of it, when you're explaining how these things are going to work together, I think it probably, it's probably more than what a lot of folks will want to kind of reach onto. But at the end of the day, basically what you're saying at the very kind of like base level is that society at some level runs on lenders and borrowers. It doesn't matter if it's at the personal level, or if it's at the corporate level, or if it's at the government level. It doesn't matter. It's lenders and borrowers. And what you're saying is that what you've developed is a system for allowing borrowers to get their money significantly cheaper. Number one, because decentralized networks in general streamline the process and kind of pull all of the fat out, so you're not having to pay layers in order to facilitate the process. So they're going to get the money a lot cheaper that way. And then like these liquidity pools that you talk about, these are just pools of money or pools of liquidity, which means that whenever there's a need for a loan, that the money is there in order to facilitate that loan. Is that kind of like the basics? So there's borrowers and lenders, and the lenders will get money cheaper, and the borrowers will have an opportunity to earn probably an even better return on their money than they might if they were dealing with traditional finance.
That's 100% correct. I couldn't have, if I try to put it any more better, like layman's, I won't do a good job. So I'll just let you ride with that. Yes, liquidity pool is just the concept that a smart contract on chain can hold money. That's all it is, right? It can hold tokens from both borrowers as collateral that they put in. It can hold the money from me as a lender who's willing to just earn interest on that, right? It's just a big pot of money in a secure, very, bolted down smart contract, but all on chain, meaning that the actual protocol is non-custodial. Like, we are not holding anyone's funds. Everyone's funds is like according to the logic of this pre-agreed upon, in this case, liquidity pool, right? That says, based on these two algorithmic, strategies, I'm going to take into account, one, the borrower's on-chain credit data, and we've talked about that, and two, just the local economics of the liquidity pool. How large is it right now? How much collateral? How much loans outstanding? The health of the loans. the price of the underlying asset, all these things, right? Those are the only two strategies that get taken into account. And then a cost of money, so an interest rate for the borrower, right, gets assessed, and that essentially is the rate of return that the lender makes. So that's the essential basics of it. And yes, Sidney, to your point also, these operate at the government level, at the corporate level. We're just saying for Liqwid protocol, we're building it at the peer-to-peer level for the first time for nations around the world that truly don't have a money market in this digital form for the peer-to-peer level that has, the reduction of, third-party middlemen, right? Even the concept of like credit card apps, right? Like don't really exist outside of certain parts of the West, right? And they would even be such a better opportunity than the payday lending loans that are the default around like, the Caribbean, parts of the Middle East and countries like Africa, countries across Africa and India as well. OPAY's in India. When you read these articles, when you read the Hindenburg reports that get written on them, like, OPAY had to stop doing some of their lending practices because Google's Play Store said, what you're doing in India and these countries across Africa is actually illegal according to our, lending services. It's that predatory because they're like these like near-term 60-day, loans that if you don't pay back accrue to like hundreds of APY, and then you're paying them interest on money that you make in the future, right? And they're basically tied to you until you can pay that back. So that's the concept, and that's the model that we're really trying to rapidly disrupt. Yes, there can be applications built on top that service the corporate layers, that service the government layers. That's fine, but my main interest and what I want to be, a year from now, 2 years from now, what I want to have said is, they built this protocol for the people, right? These are people building a system for the people. Forget about the companies, forget about the banks, forget about the governments, right? They'll have their solutions built by IOHK Enterprise and all those people, right? We are saying, let's build a grassroots up system for the people that can eliminate the need for any bank or third-party loan app like an OPAY today, right, to even exist, right? And that's essentially at the heart of what this is, And let me just say for a second, like, oh, James, please hop in.
No, I have this question. I mean, you mentioned that users will have the opportunity to gain ownership of the protocol. Can you say another word about that here, just to kind of illustrate the significance of that?
Sorry, sure. If we move on to another question, you still didn't answer my question. Like, what stops it from getting shut down? Like,
Sure. I mean, what stops it from getting shut down is Cardano as a network, right? It's unstoppable. It's distributed around the world at this point. Like, unless you can turn off every single node.
Off ramps are still centralized. You're still using barter. You're still using like money cycle.
Okay, so great example. Okay, good. So you shut down our arm through barter. Okay. Now, what is it? Can you shut down every single BVN in Nigeria? Can you stop them all from going to a centralized exchange, buying NGNT, and then making their way into our system, or just buying ADA?
What's a BVN?
If you can acquire ADA, you can make your way into our network.
What's a BVN?
So yes, you're right, Tashoma. To an extent, the barters of the world cannot play nice with us, and they can try to shut us out of their system. That can happen. But I am saying the fact that we are only relying on there's half of our entry point, right, through barter. But the other half is through the ERC20 converter contract that IOHK is building for Cardano, for Plutus, for Goguen launch, right? What that means is essentially any ERC20, stablecoin, Ethereum, wrap Bitcoin, wrap Litecoin, anything that lives on Ethereum today can now enter into this ERC20 converter contract. And let's say the Cardano CDN20 equivalent just gets basically mint and burn process. So now you have, if you came in with one Ethereum, now you have one CDN ETH, right? Now, what if our liquidity pool says any Ethereum, ERC20 stablecoin, any one of them, right? Emerging markets around the world, Russia, Brazil, India, China, Nigeria, all of them can come into our network just like that. You can't shut down Ethereum. Unless you can shut Ethereum down, you can't shut down our protocol, right? So yes, while the barter apps cannot play nice, we actually don't rely on them anymore because this thing called Ethereum exists. It actually even helps that Ethereum doesn't scale because it means that there's money to be put to work now that's just sitting idle, right? So it's like, why would you have this asset that you're like holding, it's inflating away. Why don't you come and become a lender on our network? In a minute and 30 seconds, you can be earning interest. It takes one transaction on the Cardano blockchain to actually join our liquidity pool.
So
I just want to say one more thing,
I'm sorry, go ahead.
Yeah, Sidney, please go ahead.
So you keep throwing these phrases and terms out there. And the one that you just threw out which is mind blowing to me because, and I don't even think folks really get how like powerful this is, but this whole idea of this ERC20 converter token. So basically what you're telling me is that any application that's running on Ethereum today will also be running on Cardano, or you can interact with the network in a way that you can take advantage of these applications that are running on Ethereum in the Cardano ecosystem.
Correct. Yeah. So essentially, any token that's an ERC20, not an NFT, right? Not a like ERC 721, but like the 80% of tokens on Ethereum today, which are ERC20s, you can send it to this basically ERC20 converter, Cardano specific contract, and it will one-for-one mint what you sent, basically allowing you to enter the Cardano world and then power any, smart contract, application, dApp that you really want to. In this case, we would just streamline it for obviously Liqwid, but that's just saying that's just one application on Cardano. You can do that for any dApp that's going to be built on Cardano. And I'm sure IOHK is going to have plenty of, sample template apps that they build. Me and Josh and Tashoma were just on a call, with IOHK personnel talking about how powerful the actual IOHK converter, the ERC20 converter is going to be, because, our concept is just taking stable coins and saying, hey, let's put these emerging market ERC20 stable coins to work. But, the bright people over at IOHK are like, hey, why don't you think through exactly a set of ERC20 tokens, stablecoin or not, that you'd want to have in your protocol, because the ERC20 converter contract actually doesn't matter. It doesn't care whether it's a stablecoin or, whether it's any type of arbitrary token, right? Basic attention token or any one of these other ones that are just ERC20s. So, from that standpoint, a lot of liquidity is about to start flowing into Cardano smart contracts in a way that people don't actually realize. Of course, all of that will be paid in ADA transaction fees, right? But it's gonna be like a wave of basically, Cardano as a service, right? Like that's how I think of what's gonna actually happen. And it's not just gonna be like, centralized parties. It's gonna be other cryptos coming to put their actual token that's basically not doing anything, put it to work. But to your point, James, you said something, owners of the protocol, right? What does that actually mean, right? What does that actually mean to enter the Web3 world where there's this open democracy and users become the owners, the future holders of the protocol? That means that, if you're a borrower in our system, right, anyone who joins our liquidity pool or interacts with it in any way, right, they get airdropped the actual governance token of our platform, right? So in our case, we're thinking of calling it Liqwid, right, and making a play on that somehow. We haven't really figured out the exact, mechanics of our tokenomics or what it's going to look like. But as a general idea, imagine something like this. Imagine if the early days in the system, just to become, a borrower or just to become a lender in our liquidity pool, right? Keep in mind, there's orders of magnitude cost savings, right, built into being a borrower already. But also on top of that, we're saying we're going to airdrop this, governance token that basically says you can be a voter on future features, what coins get added to the liquidity pool, what the parameters for the actual cost of loan origination, like all these things that come with like owning, a stock share basically and becoming like a holder and having governance votes basically.
And DC, when you say airdrop, you just mean that they're going to get a token. They're going to, by participating as a borrower, there's going to be a token that they get. And that token is going to, at some point have value.
Essentially, yeah. The same way we get airdropped, ADA for staking, the same way that, you would receive these tokens, right, just for participating in the actual network.
When you say participating in the network, you mean basically just having the app on your phone and having some money on it, essentially, right?
Correct. Being a borrower or lender, being in the liquidity pool. Yeah. I mean, what does participating in the Cardano network mean other than staking or being, a stake pool producer, right? Like, so a stake pool, block producer. So it's the same concept, right? It's just pooling. That's what crypto gives us, the ability to everyone can pull their assets in the same actual, in this case, smart contract, and just using arbitrary logic and code, in this case, some algo optimized, interest rate settings, you can basically run a whole system that's a very bank-like service. And oh, by the way, you get airdropped the token of it just by joining the liquidity pool. So that in a nutshell is the concept. But I want to talk to, how we're going to actually implement this thing, right? A lot of this is, high-level analysis and design, and it's great to think about, this like 40,000 sky high, bird's eye view of things. But when you think about like actually trying to implement something like this and what it takes, it's a big effort, right? This isn't like something that you're gonna, a bunch of guys just doing Ruby on Rails, just hacking their, eating a pizza on the weekend. Like this isn't that type of thing. So what this actually takes is like a whole team to get involved and get like behind this. Like this is gonna take the Cardano community, right? We're gonna need not only, the brightest Haskell fintech devs and, the brightest, app devs who understand actual Ethereum Solidity world and some of the DeFi primitives that exist today, but we're going to need community members who want to get involved in translation, right? If we're talking about emerging markets around the world, we're going to need this, translated to nations across Asia, to nations across Africa, Eastern Europe, right? So this is going to take some real grassroots, bootstrapping to make, Cardano, to make its own, right? To make it the most special app, right? That we've seen in the DeFi world to date, right? And just off the utility that it will have, it will be that. But to say that this isn't going to take, we're meeting with the Twigs of the world, we're meeting with the Vacuum Labs of the world and all of these other, companies that build great software and great, tech basically for today's crypto, protocols. And we're saying, hey, this is what we come up with. We know that this can only work on a system like Cardano, right? And these are the reasons, the primitives that we're using, right? Altala Prism, the ERC20 converter, right? The Web 2 to Web 3, window that's being built into Yoroi, maybe even Dedos in the future, right? Like these things are only going to really live on Cardano when you think about it. Oracle Pool is another example of that, right? So there's things that actually make this, very sticky for Cardano specifically. And I'm going to, the fintech firms that actually understand Cardano the most, and saying, hey, like what does it take to actually build a super team and go after launching and deploying, first the MVP of this and then, a full version 1 of this product. So that's basically what Liqwid Protocol is aiming after. It's ambitious as hell. If my current, my consulting shop and my buddies who work with me are like, what are you working on? Like, we want to talk about it. We want a piece of this. And, they're as interested as I am because like they understand the implications of this, right? Like when you really say that you don't need someone else to set interest rates, right? Like I have buddies who work at big banks in New York and their whole unit is spent just trading interest rate products, right? When you say that you can actually do that with algorithms, and not only that it's already being done on Ethereum today. And it's actually easier to do on Cardano because we're using, Haskell functional programming. Like you're basically saying it's game on for whoever, really implements this thing first. And to be clear, I've already talked to several fintech firms. They're already developing the Uniswaps of Cardano, right? They're already developing, the basic, AMM protocols that are going to allow automated trading, via liquidity pools, basically. So these concepts are already coming here now. Like, it's not like, I'm not saying something that's like really out of this world. No. I'm saying we can take these things and put them together in a way that hasn't really been packaged, and basically sold to the emerging markets of the world and saying, hey, this is your opt out of the Web 2, loan app that you basically is the only game in town right now. This is, your chance to say, hey, this is the game I want to play in and no one can stop me, right? So Tashoma, to your point, like, unless you can stop your people from getting to a centralized exchange, like, unless you can shut down your internet, like, there's no way these governments, and we've seen some do that, right? But over the long term, that doesn't work, right? Like, over the long term, the people are going to demand their freedom, right? And we're just giving it to them. We're saying, take your data, take your finance, and take it now, right? Build apps on top. Build things on top that allow you to go further.
DC.
Yeah.
What is at the base level, right? Because every time we talk about this thing, I just learn something new, even though I've been working with you. So at the base level, I'm speaking from like the African point of view, right? What does this mean for the a farmer, right, that wants to take advantage of that wants to take a loan? Usually they just go through a method which is actually ripping them off, like the old pays, right? So what does this mean for them? How can they take advantage of this? What is Q token to them? The governance token. What is credit score? Why do they need all this? Why do they have to go through this process? What does it mean to them?
I mean, that's a great question, and you're starting to talk about like specific players and users of the system, and building applications that are more specific than just borrowing and lending. When you think about it, that's kind of general as a concept. Like, that's the base layer. And when I start talking about like layer 3, like building on top of Liqwid, like Josh, to your point, I'm saying like what happens when you use the governance token to incentivize some African open source software devs to say, hey, we're going to build an app that says any farmer, whatever the commodity that you're producing, right? Whether it be coffee, rice, anything that's being produced in Africa and sold on the open market. Let's build a futures market for these farmers. And let's also integrate it with a lending service that uses the liquidity from Liqwid protocol, right? So you're basically saying in one-stop shop, you allow these people to, trade the risk, right, of the future price fluctuations of the, in this case, let's say coffee in Ethiopia, right? So let's say you're producing a ton of coffee, right? And you want to basically lock in next year's price right now so that you can operate your business. You can do that, right? Using this system, using our data, right? And you can also allow them to build up their own credit, right? Charles has very ambitious plans when it comes to what he wants to do in agri-tech and how he wants to, talk about things like bunching farmers together and then creating like entire bond products that you can sell to people, maybe even insurance backed, in some cases. So in those cases, those are much more like, lofty, like, really trying to like, at some points, like, mature that entire market at once, like orders of magnitude. I'm just saying, how do we allow them to, basically secure their cost of operating, right? So that they can lock in, next year's coffee at today's prices, right? And also allow them to secure, cheap loans and financing to continue operating their businesses. But, there will be many solutions on Cardano that are purpose-built, I think, especially for the agri-tech, commodity producers of the world. Not just coffee. When you talk about like oil, when you talk about clean water, we talk about incentives around clean air and the work that IOHK is doing in Mongolia, right? And thinking about ways to curb, some of the bad habits and practices using crypto incentives, basically. Those type of things are to me what is sticky about the future here. And yes, like again, that's just a layer 2. That's just a layer 3 application built on top of our layer 2, right? For the coffee farmer, right?
Tell me something, DC. Do you see like these systems like in their fully evolved state, basically like replacing this whole concept of like universal basic income?
You're starting to talk, Tashoma. Like we could talk that talk. Like that's where it ends up, right? Like when you think about it, if you produce on-chain credit, right, that's tied to your Atala Prism, that's already, the latest and greatest KYC AML, your bank knows this is you and this is actually what you've done on-chain. Like there's no hiding that. We can use ZK proofs. We can make it super secure and private. I'm pretty sure they're already doing ZK proofs for the voting. So think about that concept for a second. You already have a passport on-chain that also collects credit for you, right? So now you're saying you can build on top of our open source software stack any application that wants to talk to that credit that you built in our protocol, right? And maybe even other applications that want to talk to the credit. So even going like cross Cardano chain applications, not even those built on top of Liqwid protocol. So you're saying both vertically and horizontally, the data that you're accumulating tied to your Atala Prism, right, in our system can be used to power mortgages, can be used to power data products. You can go to the banks and say, hey, this is the data I'm willing to actually sell you guys or sell it to your data marketplaces. This is what I'm willing to keep, right? Like say Josh wants to keep his, maybe address, but he's willing to give up all his other information. And whatever the market price for that is, they're going to now have to pay Josh, right? Because it's the only way they'll get access to that data. Like we're really saying for the first time, we can give them that privilege. And there's nothing that the banks can say, at that point, they'll have to actually become like, a service provider. They'll actually have to become a value added player in the value chain, as compared to right now when they're just sitting in the middle, sucking up fees, being like essentially payday lending schemes, right? In this case, in OPE's case, Google Play Store had to step in and say, this is borderline illegal. Like you cannot do this anymore. And like, it's one of those things where like we see these things in the West, but we have, credit cards. We have, 0%, short-term loans and things to mitigate against this. But, my family in Jamaica, they don't have that, right? And I'm building this system for them, right? I'm building this system for the people in Nigeria that are still dealing with, the OPE equivalents that exist, right? And like, again, this is as much about me as it is them, right? Because I can take my ADA and become a liquidity provider and earn interest that's probably going to be, much higher than just the base staking rate, right? So,
and DC, I want to jump in right there because that's the answer to the question, the earlier question, right? Like the one about my friends in the D in Detroit, like how can they participate? Right. So basically what I hear you're saying right now is they can become a liquidity provider. So they can take $20, $30, $40, $50, whatever, an amount that feels comfortable for them. And they can purchase whatever assets are part of the liquidity pool. and then they can basically put that liquidity in the pool, which then that liquidity becomes available to be loaned out to other people. But they get to earn interest off that. So if they put, you know, $20, just an example. Of course, the numbers are not there, but if they have $20, which, you know, most people have $20. I mean, it's like, you know, you can find $20, you know, under the bed maybe, or, you know, if you know, you can find $20, put it that way. So if they were to put $20 away per month if they were to put that, instead of putting it into their bank, because what are the interest rates that you get from the bank now if you put your money in the bank?
Not quite one.
Yeah. What was it? What was that again, James?
Not quite one.
Not quite one. Okay, not quite one. Okay, so instead of putting it in the bank, they can put it into Liqwid, into the protocol, which then goes into this pool that's available for people to, you know, borrow off of, and then they make money off of that. They get an interest rate off of that, and over time, that interest rate can like, even at $20 a month, can actually like create wealth.
And to your point, Sidney, money market funds are something that exists today in, like, you know, markets like America and across Europe and England, right? So like the idea that like short-term, you know, borrowers and lenders create their own kind of like market, the same way a capital market and a stock market is built on top of that, right? There's actually funds that just become basically lenders in these money markets. And like you said, Sidney, they just accrue that interest, you know, every, you know, month, whatever, whenever they get those interest payments. And that's just the entire point of it. It's that there's these, you know, short-term ways to basically earn on your capital that you have.
But you have to have a certain amount in order to participate in those markets. You have to have a certain amount of capital. Now, I'll just kind of give an example because I work in, you know, kind of the insurance industry. There's certain products that you can't even look at unless you got $100,000. You know what I mean? So even like going back to the idea of just $20, I mean, I'm using that like as a real use case, just 20, you know what I mean? If you took $20 and put it away, you know, each month into like the Liqwid protocol, you would at some level be able to start creating wealth, because there's no products in America that I know of that will allow you to do that.
Right. Well, and we're seeing it with staking already too. No amount of being told that you can earn on your capital convinces a lot of people, right? But the moment I see that I made even 50 cents on my $20, I'm hooked. Tell me more, right? Like just
totally
seeing that's the thing that once you get that, oh wait, I found $20, I could find 50 next time.
Right.
You know, I'm willing to do what I got to do to put a little extra away. So if we can make people see that, and that's why I love the ownership piece too, DC. Like we know this is what all of these protocols offer, is the tokenomics piece. But the moment people see, hey, this thing that's providing value in my life is also something that I can become a stakeholder in. It's not without precedent, but it's just not easy. It's not easy to engage in, right? And you're going to put that on people's phones, from what I understand. So I'm going to be able to look at that. I'm going to be able to check my ownership stake, how much I made every day, and that's a virtuous cycle, right?
Yeah, that's the goal, you know, and that's why, you know, we're partnering with, you know, the best. You know, we're going to find, you know, we've already got some teams out there. I won't say, you know, too many names, but talking to different firms and saying, hey, you know, what have you guys done before? What have you built that's very similar to this concept of, you know, liquidity pooling for borrowers and lenders? You know, what do you know about, you know, using algos to basically set interest rates, you know, using different strategies basically to optimize those algos? These concepts that, you know, in many cases, these firms are pretty familiar with, because these primitives exist on Ethereum, right? Like,
yeah.
And a lot of these firms actually work and build, you know, blockchain dApps on Ethereum. So it's not like, you know, like you said, James, some of these concepts actually are already in the wild, but the way that we plan on repurposing them and packaging them, I really do think that you're talking about, you know, like to Tashoma's point, the first time you're going to build data markets and tell people, hey, you can sell your own data and you can actually set the price according to, you know, whatever the market value is for the piece of data you're selling to whom. So that's unprecedented. Like that's never happened before. But I'm saying out of the gate, you know, we can do that on the system because the primitives already exist today. So it's all about, you know, implementation. It's all about going from zero to that, right? And doing it as quickly as possible.
I have a question.
Yeah. Lamine.
Yes. No, I understand most of it. I understand the underlying idea behind removing the middlemen in between lenders and borrowers. My question for you is, in the emerging market, one of the issues lenders have is what happens when borrowers basically start defaulting on payment, especially when at the beginning where you don't have the amount of data, the amount of credit history required to basically make the proper loans. What happens in the case for the lender if borrowers default in Africa, for example?
Yeah, that's a great question. And honestly, it works no different in the systems on Ethereum today. So if you could think about this concept, on Ethereum today, there's no notion of proof of person, right? They're just all different addresses. They're just a random scheme of numbers and words, right? So when you default on your loan on Ethereum today, you just get liquidated, right? By the liquidators in the system who are actually, basically getting paid to come in and buy your underlying asset at whatever it is, 20, 30% discount, right? And keep in mind, Lamine, it's kind of different from the loans today because there's no term limits. Like there's no fixed duration, right? There's a stable rate that you can pay in terms of interest rate that won't change over time. And there's a variable rate that you can pay compared to basically it's composed of more recent data in the system, right? So those two things make it actually a little different than the current like fixed term, like loans that you see today in payday lending schemes. But the same concept, right? If you default, basically someone's going to step in and say, I'm going to purchase whatever underlying asset. Compared to today, some of these loans don't have underlying asset. There is no collateral that gets put up, right? What happens today is some notion of credit score gets hurt, right? These lenders, these basically loan apps get tied to whoever the user is that defaulted, and whatever money they make in the future, and Josh, correct me if I'm wrong, basically the OPAs of the world have a claim to that money because you owe them and had no collateral that they could pay. So our system in many ways is actually a little safer because we're saying from the start of the system, because we don't know your ability to repay this loan or ability to stay, not get liquidated, basically, stay over collateralized, what we say, we're going to, set in, 10%, 20% collateral. And again, it all depends on how much liquidity we have in the pool. If we have a couple, NFT, Lambda Bro tokens that are $500,000 to $1 million, that can mean that we actually don't need that much collateral to be put up because we have so much in terms of the, collateral liquidator side, guys who can step in and basically purchase that underlying. So again, it's not going to be the same exact model as the Web 2. And that's why we're talking about introducing things like on-chain credit and things like social lending equivalents, because when you do that, you not only say, here's proof of person, but you also build kind of a social network around gamifying incentives to build good on-chain credit, right? So basically the current model is actually set to gamify incentives to do bad credit in general. When you think about what a zero collateral payday lending scheme is, and Tashoma, like you did a great job at like showing this. If you want to pull up Tashoma, the recent the pitch deck that we have, just that one graph that kind of shows the real actual APYs of this stuff, it's so much better to actually see this and see the reports that have been put out than for me to try to like explain it, because it really is kind of astonishing when you see like, okay, the OPs of the world say that you're going to pay, 12, 20% interest. But when you default, Lamine, like you just said, like what you actually end up paying in the current system compared to a protocol where if you were to just default, someone just stepped in and bought your, collateral, your underlying asset, you got to keep your collateral. And basically that's how you were, made whole again. It's such a different model. You basically limit your downside risk compared to today's world where, your risk is exponential. You're basically paying at an accruing debt until you can pay off the whole loan plus the interest that you've accrued. So it's a totally different concept. Tashoma, you want to pull that up real quick? I could pull it up too if you can't get access to it. Here, let me pull it up real quick. Can you?
I think I got it up now.
Yep,
Oh, great. Yeah. So cool. So this is exactly right. This is the game. The game is the OPAs of the world come in and the OPAs says, right, and it's saying, claim 12% max AP, but what you're actually paying, right, your actual interest that you can pay 300 to 400%, right? And if you're late, forget about it. Like, so the game is like to mask this under a product that looks simple. And that's why I think this emoji up top kind of sums it up, right? And it's like, you're tied to the OPay lender as soon as you default on that loan forever. But in the actual protocol where someone could just step in and buy your underlying, you'd be free from that. You'd have your collateral, and yeah, you probably lost, 20, 30%, but you're not actually accruing debt anymore, right? And actually the incentives are gamified in a way that you don't want to get collateralized. Like, you'll know when you're close to basically about to become liquidated. You actually want to do everything you can to stay collateralized in this system, because the longer you stay collateralized, the more and more good on-chain credit you're building. It's akin to saying you can increase your FICO, credit score by just not getting a default on your loan, and everyone else, is basically watching you using the same system, because we've implemented some social lending, aspect to this. So that's the concept in general. But I want to make it clear, OPay is the incumbent. Like, OPay is, the Web 2, dominant loan app of today. Like, that is who Liqwid is trying to come and disrupt. So the borrowers are great. There's always people with money who want to earn interest. But the lenders are great, but the borrowers are actually the key user, right? We need to basically build a system that frees the borrowers from the OPays of the world. I'm not so worried about those who have money and want to earn interest, right? Like, those people exist, and that's great. But I'm more worried about the people who are getting, basically robbed. When you look at those numbers, like, truly robbed from the OPays of the world, to the point where Google has to step in and say, enough, like, quit it. So that's what we're dealing with.
It's the way we gave a perfect answer. I didn't think about the collateral and how it played into all of it, but yeah, it absolutely makes sense at this point.
Collateral does play into things, and it's a good question, Lamine. I mean, because it's different. Like, Josh brings this point up a lot, right? How do you convince the Nigerians who say, I can get a 0% collateral loan today just using this app on my phone? Well, you convince them by saying that same app, you can just use a different one that lets you build on-chain credit, maybe even let you buy a house with zero collateral in the future. Would you rather get a payday loan today for a couple $100 for zero collateral, or would you rather get a house, 2 years in the future for zero collateral?
It makes sense.
Credit.
It makes sense. Right now, the only thing I'm worried about is, I'm not worried about it. I'm just wishing you guys good luck. It's about implementing the technology and all of that. Yeah. But I think you got it secured if you're doing the right conversation with partners and everything. So.
Yeah, no, implementation is everything. You're 100%, bro. That's why we're trying to, build a dream team, right? Like, assemble the greatest.
That's it. Come in like the Avengers.
That's right.
Logo idea.
Yeah.
Yo, so we actually spent the whole episode talking about Liqwid. We had a bunch of other stuff to talk about as well.
It seems right tonight.
Yeah, it just flowed. So I think we should wrap up. Maybe next week we'll look at Joshua's staking pool and its health and how it's been performing. Has it been good? Has it been bad? I think it's been good. Looking at the leaderboard. So we'll get into that next week.
And Tashoma, I just wanted to jump in real quick, because next week we will have gone past the Catalyst date. So maybe we can just let everyone know that we'll drop a link in the comments for Catalyst, which is this kind of Cardano community project for helping bring more projects into Cardano. So maybe we'll drop that in. That way they can jump in and check it out. That's going to be on Wednesday at 12. I believe it's James 12 CDT.
I think so. Yeah,
okay.
Check that.
Well, yeah, guys, you know what to do. Like, share, and subscribe. Look out for us on Spotify. We're going to wrap this up. We'll see you next week. Thank you.
Awesome, everybody.
Boom.
Boom.